Namaste and welcome to the topic of issue of bonus shares under accounting for shares and debentures. Illustration number 16, which is given here, is having coverage of almost all key provisions pertaining to bonus issue. It is pertaining to SEBI regulations, Companies Act, need for relooking at the authorized capital, and also the reserves and the procedural matters. We will just take the key features and identify how does it come within the purview of the Companies Act. Here the company has made a final call. It is with a purpose. It wants to capitalize its reserves by way of bonus, and then the problem says securities premium includes something which is not received in cash. It is not profit realized in cash. Then once again it says out of the total capital reserve only 60,000 is profit and loss on sale of plant and machinery, suggesting of the total what is available for issue of bonus shares is what is realized in cash, and therefore out of capital reserves you can take only 60,000. Then it says 20% of 12% debentures are convertible. Now here when a provision like this comes, we have to find out what is the SEBI requirement in respect of debentures which are convertible and there is an ongoing bonus issue. Now these 4 or 5 points make us understand what is the provision under Companies Act and what is the provision under SEBI. And incidentally, you will note that SEBI covers Companies Act and it has got other practical provisions also. Let us get going. Take section 63, subsection 2. What it says, a resolution is required to be passed by the general meeting, and based on that, board can pass a resolution recommending the issue of bonus. And it says members' resolution has to indicate intention to capitalize the profits. Issue of bonus shares means the company doesn't receive money, it just converts reserves into capital. That is why it is known as capitalizing the reserves. Converting reserves into capital is capitalizing. And must mention the amount of profits or reserves to be capitalized. Means the resolution of the member should be specific in terms of what is to be done and what is the quantum. This is section 63 subsection 2. Besides this, it says the partly paid shares outstanding on the day of allotment have to be made fully paid up. Simple. That is the reason this particular illustration talks of making the final call and making the shares fully paid up. Now, if we look into the guidelines given by SEBI, they are quite interesting. We can see it item by item. The company made a final call. What SEBI says? The partly paid shares, if any, outstanding on the date of allotment are required to be made fully paid up. This is one requirement, therefore the call. Second, 37,500 includes a premium of 7,500 for shares issued to vendors under a scheme of amalgamation. Means it is for consideration other than cash. It is not realized in cash. For that, what SEBI says? SEBI also talks about it along with one more. Capital reserve includes only 60,000 as being profit on sale of plant and machinery. When it is profit on sale of plant and machinery, it is profit realized in cash. It is available for bonus. On both these two aspects, SEBI's requirement says the bonus issue shall be made out of free reserves built out of genuine profits or securities premium collected in cash. If it is for consideration other than cash, you cannot consider, and therefore this point has to be noted when we solve this issue. Then comes one more. 20% of 12% debentures are convertible into equity shares of ₹10 each fully paid on 1st June 2015. See, the bonus issue is being considered around 20th of April, but there is a conversion due in 2 months. Is there any obligation of the company? Refer to once again the SEBI circular which says no company shall, pending conversion of FCDs, PCDs, issue any by way of bonus unless similar benefit is extended to the holders of PCDs to such convertible part. Means if you are giving it to equity shareholders, you need to give it to future equity shareholders also when the debenture gets converted into equity. This is the principle which talks of. Therefore, in the problem, when there is a question which says, are the convertible debenture holders entitled to bonus shares? Answer is yes. As per the SEBI guideline, if there is a convertible portion of debentures to be converted into equity, on such equity there should be reservation of bonus shares which are to be released at a later date when the conversion takes place. It is talking of the rights of debenture holders. With this, we have to get into what is the next. The company decided to capitalize reserves by way of bonus. Capitalize means convert reserves into capital. Means when the company issues bonus shares, it doesn't collect money. It is just an accounting entry shifting from one line entry to another line entry. It says for every 4 shares, we will issue 1 bonus share. Here one thing we have to see, we have seen SEBI, we have seen Companies Act. We have to just see when you issue these bonus shares, do you have enough authorized capital to accommodate this? Let us just cross check this now. We have 1,35,000 shares. We are issuing 1 for every 4. 135 divided by 4 is 33,750. Okay, then we have got convertible portion and it says 20% of convertible portion. What is the value? 7,50,000. 20% of it is 1,50,000. 1,50,000 divided by 10 shares means 15,000 shares are converting equity. It is a direct equity, means 135, 33,750 equity. And as per the rules of SEBI, if there is going to be conversion of debt into equity, on that equity we should reserve the bonus in the same way we give it to equity. Means 15,000 divided by 4 is 3,750. Then the total shares that will be issued becomes 1,35,000, 15,000, 3,750 and 33,750, and which totals up to 1,87,500. But what is my authorized capital? 1,50,000. I am short by 37,500, which is the bonus which I am going to issue. And existing is just enough for existing shares. Therefore, before we proceed with this, the board should ensure that there is alteration of the capital clause to enhance, to cover minimum of 1,87,500 of authorized capital. It can be more than that also. This is second aspect which we need to look into. Third one is to issue 3,750 and 33,750, say 37,000. Its value comes to 37,500 into 10, 3,75,000. Now, what are we going to do when we issue bonus shares? We are converting reserves and surplus and converting it into capital. In that case, should you not check, do you have enough reserves and surplus? And whatever reserves and surplus that you have cannot be converted straight away. It has to meet the criteria which is indicated in the circular of SEBI, which says realized in cash and it is built out of genuine profits. Now, taking that into account, let us just have a cross check. As per the balance sheet, we have reserves like this. The total amount comes to 6,30,000. And as per the, we saw now that we have got reserves of 6,30,000. And when we pass it through the SEBI guideline and the net amount after excluding non-cash profits, it comes to 5,70,000. Means it meets our requirement of 3,75,000 of reserves required to issue 37,500 bonus shares. That's fine. Now we take the problem proper. Let us take the problem. what it says, the company made a final call of rupees 2 each on 1,35,000 equity shares. The call money was received on 20th April. Thereafter, the company decided to capitalize its reserves. Securities premium 37,500 includes a premium of 7,500 for shares issued to vendors pursuant to amalgamation. Means it is not out of profits. It is not realized in cash. Therefore, securities premium is eligible to the extent of 30,000. Then, capitalized capital reserves include 60,000 being profit on sale of plant and machinery. This suggests 60,000 was realized in cash. So far as the balance 52,000, we do not know. Therefore, out of 1,12,500, only 60,000 is straight away eligible. Out of securities premium, 30,000 is eligible. Capital redemption reserve, there is no bar on it. General reserve, there is no bar on it. Then we have got profit and loss account 2,70,000. Means totally we have got 5,70,000 and our requirement is 3,75,000. Means there is possibility of issuing the bonus shares based on the reserves. What is the entry that we are making? We are converting reserves and surplus into capital. We are taking 30,000 from here, 1,80,000, 60,000, 30,000 and balance of 37,500 we are taking from profit and loss account. That makes 3,37,500 and we issue the bonus shares. This is what we indicate here now. Once we issue the bonus shares, how does it look like? Equity shares, it was 1,35,000. 10,80,000 was received before. We received 2,70,000 as calls on shares. Then on that we issued 33,750 bonus shares, shifting from reserves and surplus into capital, 3,37,500. That brought the shares to 1,68,750 and paid up value to 16,87,500. And the respective reserves and surplus got reduced accordingly. Now, going from here, we find 20% of 12% debentures are convertible into equity shares of rupees 10 each, fully paid up on 1st June 2015. In that case, as per the SEBI requirement, we are supposed to make a reservation for it. We are not passing an entry, we are just making a reservation. In the sense, 20% of 7,50,000 is 1,50,000. To that extent, we issue equity shares, converting debentures into equity. It doesn't require any funds flow. Once you have got 15,000 equity shares issued, you have to provide for reservation of bonus shares. Bonus shares are of 15,000. You are going to issue one for every 4 shares. 15,000 divided by 4 is 3,750 into 10, face value is 37,500. We are going to take 7,500 out of securities premium, which is available here. And out of 2,32,000, we are going to take 2,30,000 as such. Now that should help us make reservation for it. What happens when all these things are done? Our total equity moves from 1,35,000 to 1,68,000 to 1,87,500 when we add the respective equity and the bonus reservation, and the value comes to 18,75,000. This is where we say our authorized capital has to be 18,75,000 plus. And once we do that, we will have compliance with the requirements of business. Now, what the problem asks, show necessary entries in the books of the company and prepare the balance sheet. What is the entry? 2,70,000 we raised equity share final call on capital account, and then we received the money on 20th April, bank account equity share final call account. Then we issued on equity 33,750 shares as bonus shares, transferring from reserves to capital. Capital redemption reserve 30,000, 1,80,000 of general reserve, 60,000 of capital reserve, securities premium 30, 37,500 as noted here. It was transferred to bonus to equity shareholders account. Then it was converted into capital. These are the 4 entries. It says show the necessary entries in the books of company, which we have passed the entries. Prepare the extract of the balance sheet. Extract of the balance sheet is the same. Particulars. Before the issue, this was the situation. We raised the final call. We issued the bonus shares, and after the issue of bonus shares, our figures appear under this column and the particulars appear under this column. And what we are saying is this is how the balance sheet looks like. Particulars and after the issue, preference shares, and you should note here our authorized capital has to be 1,87,500 including the reservation. Once this is done, we move to the next topic. Show the necessary entries. Entries shown. Prepare extract of balance sheet immediately on bonus issue. We have seen that before conversion of. Are the convertible debenture holders entitled to bonus shares? This we have seen in the beginning. But to repeat, SEBI guidelines says no company shall pending conversion of FCDs and PCDs issues any by way of bonus unless similar benefit is extended to the holders of such FCDs in proportion to such convertible FCDs and PCDs. And it also says the shares so reserved may be issued at the time of conversion of such debentures on the same terms on which bonus issues were made. Therefore, we should wait till their due date of conversion, then release the reserved bonus shares, and it takes care of their interest. And this is what we have done. 7,50,000 was there. Their conversion takes place to the extent of 20%, 1,50,000. On that, we have provided for capitalization to the extent of 1/4 of it, 37,500 or 3,750 shares. And that is the end of this small but interesting topic. Thank you so much. Thanks a lot.